Welcome back, everyone. This week was, well, it was a fascinating one. The market basically split in two, giving us some big winners and some pretty clear losers. So today, we're going to walk through exactly how we use that divergence, that split, to our advantage, and turned what looks like weakness into a really solid income-generating opportunity.
Okay, so let's get our bearings here. What you're looking at is our strategic portfolio. These are the core, foundational holdings, the stuff we're planning to hold for the mid to long term. Now, it's really important to remember, this view does not include our short-term options plays or any tactical trades. This is the bedrock of our strategy.
And here's how that bedrock is built. You can see almost 58% of it is in what we call our AI fortress. Think of these as our dominant, cash-generating tech giants. The other chunk, about 42%, is in our crypto group. That's our calculated bet on some potentially explosive, high-upside growth. So really, it's all about balancing that stability with some high-octane potential. All right, now for the interesting part. This past week was a perfect example of what we call a bifurcated market. I mean, it really had a split personality. It was a tale of two completely different stories playing out right inside our own portfolio. And you can see that split right here, clear as day. Over on the left, you've got the Laggards. Great companies, ServiceNow and CRCL, but they took a real hit this week. But in the other corner, our AI fortress really showed up to play. AMD, Amazon, Broadcom, and especially Meta just had a fantastic week, putting up a wall of green that kept the whole portfolio steady. Now, for a lot of investors, seeing that kind of red in quality names would, it would trigger the panic button. But for us, it's the exact opposite. This quote on the screen is pretty much our mantra. Seeing a little blood in the streets isn't a stop sign for us, it's a green light. This is actually when the real opportunities start to show up. This kind of divergence with the perfect setup for one of our favorite core plays, the strategic pivot. The idea is actually pretty simple, but it's incredibly powerful. We systematically trim a little bit of profit from the stocks that are flying high, and then we redeploy that cash to generate income from the stocks that have been unfairly beaten down. We're literally rotating from our strength into that weakness. So, how does this actually work in practice? Well, it's a very disciplined three-step process that's designed to take emotion completely out of the equation. First, we fund the trade. So we locked in some gains by trimming a tiny bit of our Meta position and closing out a small position in NVDA. Step 2, we identify the opportunity. ServiceNow's big drop caused its options to get much more expensive, which is perfect for us. And finally, step 3, we execute. We took that cash and put it to work. So let's get into the nitty-gritty of the trade itself. We sold what's called a cash-secured put on ServiceNow. All this really means is that we collected a nice chunk of cash premium today, and in exchange, we agreed that we're willing to buy the stock at $75 a share anytime between now and July of 2026. And as you can see, that $75 price point gives us about a 10% cushion from where the stock is trading right now. So we're literally getting paid to be patient and to potentially buy a fantastic company at an even better price. And this is the absolute beauty of this kind of strategy. We've basically engineered a win-win situation. There are really only two things that can happen, and frankly, we're pretty happy with both of them. Scenario 1, the stock stays above $75, the option just expires worthless, and we keep all of that premium we collected, free and clear. Scenario 2, the stock drops below 75 and we get assigned the shares. We get to buy a phenomenal company at a cost basis we already decided was a bargain. See? Win-win. So if we zoom out for a second, what's the big takeaway from all this? Well, this one trade really captures our whole philosophy. Number 1, stay mechanical. Don't let emotions drive your decisions. Number 2, let your runners run. And maybe most important of all, when the market gets fearful and volatility spikes, don't run away from it. Lean into it. Use that fear to your advantage to generate income. That is how you turn chaos into consistent cash flow. And that's our strategic pivot for the week. If you found this breakdown valuable, the best way to help the channel is to just hit that like button. It really does help this analysis reach more people. Thanks so much for watching all the way to the end, and we'll see you in the next update. Bye for now.